Hi investors, it's Todd Gordon here. If you don't know me, I'll introduce myself quickly. You may have seen me somewhere on a trading video on the internet or possibly on CNBC offering market analysis. See, I began working and trading the stock market right after college in San Diego, Los Angeles, then back east to Wall Street in New York City for a brokerage firm and a hedge fund. After leaving corporate life in 2010, I founded a fairly well-known online trading company called tradinganalysis.com. See, my career has evolved into wealth management, and now I'm a managing director at Ascent Wealth Partners here in Saratoga Springs, New York. So we have a lot of volatility here following the COVID-19. What a time to move into wealth management. The persistent and extreme levels of volatility are unlike anything I've seen in my 20 years of trading and investing. As a result, a lot of my friends and family have reached out in this tumultuous time spurred from COVID-19 asking me for my stock picks. I wanted to do this video because frankly, that's the wrong question to ask in here. It's not a magic stock that will make this massive market sell-off more tolerable. What's the right plan? The way to weather this storm actually lies within you. It's how you behave from a financial point of view that will get you through this period. See, I'm focused on three things in here, not one of which is picking the right stock. Number one, your investment time frame. Number two, your risk tolerance. And number three, monitoring your own emotions and behavior. Let's talk emotions first. It's easy to watch the value of your nest egg drop in such a short period of time, become alarmed, and possibly make a bad decision that will impact you well into retirement. A common market adage is stocks stair-step higher, but then jump down the elevator shaft on the way down. Do you want to know the easiest way to contain these emotions in a highly volatile market environment? It happens if you know deep down that you're acting on a well-formulated investment plan with proper equity and fixed income allocations. See, I think of investing and trading like a boxing match. You enter the ring with a game plan, knowing full well you're going to take some shots throughout the bout, and when those shots hit you, you put your defense plan to work, which minimizes the damage. Investing's the same thing. Volatility pockets like this should be part of your investment plan. And when they come, the shock is minimized, allowing you to stay focused on your game plan, and possibly even play a little bit of offense. Related to this, and the second thing I'm focusing on is time frame. You need to understand your time horizon for investing. The money you have committed to the market. When do you need that money? Is it next year, 5 years, 20 years from now? That needs to be decided before $1 goes into the market versus other investments. This will guide how you allocate your assets. So if you're younger and say 20 years from retirement, we at Ascent would typically recommend that clients in this demo have a higher equity allocation than a person who's older. If you're not sure how to develop a proper investment plan, please, especially for times like now, consult a professional. We remain positive on the market longer term and actually view these low share prices as an opportunity to add to your position. We think the market will stabilize and eventually make new highs. Lastly, I'm thinking about risk tolerance. Your risk tolerance is unique and personal to you. We like to say it's the risk level in your investment mix that lets you sleep at night. If you're not sleeping right now, you might be too heavy in equities, or perhaps you're underweight in equities and don't have the right names in your portfolio. Congress is about to pass the biggest economic relief package in history to the tune of $2 trillion, and the market has rallied 20% just in the last week. It might be time for a reorganization of your portfolio. Let's say you have implemented a good portfolio plan with a bond equity mix of 60-40. Because of the sell-off in equities, you might be at 50-50, which means now is a time to rebalance. You want to sell some of those bonds and use that capital to buy quality companies at depressed prices. We at Ascent believe the key is to have a plan and know what you own. That's why we believe a portfolio of carefully structured and individual stocks and bonds, ETFs, is superior to simply owning the entire S&P 500, which is known as passive indexing. Passive indexing puts you in the position to own everything, the good with the bad. The key is to know what you own, which allows you to better manage risk. As Jim Cramer has been stating so accurately and emphatically, there are fundamentally strong names offering value that are being dragged down because they're included in various indexes and ETFs. Take this opportunity to strengthen your portfolio with fundamentally strong names poised to prosper once this COVID-19 pandemic passes. Take advantage of up days in a tough market to exit weak or vulnerable positions. If we can help you, please let us know. Check us out at ascentwealthpartners.com, or you can drop me an email personally at toddg@ascentwp.com, and we'll do a complimentary portfolio assessment. Good luck out there. Stay safe both in and the markets. We hope we can help you in the future. Take care.